You were listening to Charting Wealth's comprehensive review and forecast for the week beginning Monday, the 13th of February, 2017. We have the old charts back. We tried a design. You guys didn't like it, so we're going back to the divided chart. You seem to like that better, and we listened to you. Markets ended up in stocks, both the S&P 500 and QQQ, the NASDAQ 100 up at the end of the week. Gold up. Bonds barely down. What do we have going on? What's happening? Well, bonds crossed over going up on our charts at the end of the prior week. That is the week ending the 3rd of February. And they continued to move up over the course of the week. What did we do? Of course, we jumped into bonds on Monday morning of the prior week. After we had the gold crossover, we had an entry point. We also had an entry point on the 2-hour chart, and we jumped into that. And how did the week end? Well, our Heiken Ashi candlestick shows us that we had an up week as far as the average pace goes. We are up on that entry, and we also see that our PPO, our price percent oscillator, is continuing to oscillate up. When we look at the derivative oscillator, it also grew throughout the course of the week. So we are happy with what occurred. We are still in that trade. When we look at the 2-day chart, we can see throughout the course of the week that we started off with the 2-day chart ending on the 6th. That was Monday. Started off not as strong, with still some indecision, but it shot up big time on the next 2-day chart ending on Wednesday, the 8th. And we saw, let's see, the opening, the low throughout that day, 119, the high 122. And then, of course, as we finished the week, we ended with the week at the last was 120.98. So again, we still have uptrending on the 2-day chart. So we are still in that venture, and we will continue to monitor it and just see how it plays off. It looks like we really have had a bounce off the bottom in 20-year bonds, and we will continue to watch. We had a bounce that started back on the 2-day chart back on the 27th. We didn't have the confirmation on our weekly chart, of course, until the end of last week, and that is where we confirmed the bottom and where we jumped in. And again, for those of you who even just did a short-term trade up $2 or $3 and out, you of course did extremely well on it. And we will continue to monitor it. Now, let's go from bonds, which is our latest trade that we got into. Let's go on the weekly chart, take a look at the S&P 500. Of course, it rotated over. We had a vertical crossover on that back on the 25th of November. Bonds rose up until they really peaked out the S&P 500 until it peaked out around the 16th of December, slid sideways for many weeks, and then finally started moving up back on the week ending the 27th of January. We then rose above the highest high that week, and then the prior week actually closed above it. And then, of course, this past week that ended on the 10th of February was a boon to the S&P 500. We had been watching on the 2-hour chart, the 2-day chart, how it could never cross over for weeks. It never crossed over on the PPO, so we didn't have an opportunity to jump in on our traditional trading method where we wait for the weekly chart to cross over, the 2-day chart to cross over, going in the same direction, and then, of course, the 2-hour chart to pull back and then cross over in the same direction as those big charts. Well, we may finally have an opportunity that now that we finally had the 2-day chart crossover going up. And that is the way that the week ended. So that is a good sign. We will look for a trade to jump into possibly if we check out what's going on the 2-hour chart now. Still in a confirmed up move, so we'll see if it pulls back and gives us a jumping in point. Of course, all the movement still well above the weekly trend line. That is where the S&P 500 is hanging out, so we may have a trade in that yet. Let's go and take a look at the trade we've also been in for quite a while, since January, We saw the crossover going up back on the week ending the 6th of January. We jumped in the 9th. Of course, we talked about this trade on our review of the month. It was, I'm trying to think, the Qs, I believe, we were up 3.15% for the month of January. Amazing. So that trade has continued. And in fact, those of you who like to do our traditional method, we've just started doing this weekly crossover trade. The 2-hour chart actually jumped over, going up. And we're going to go back and take a look at when that occurred. And again, it was another very good move. That actually occurred all the way back on the afternoon of the 1st of February. That was the jumping in point. Let's see what the highest high was, 125.61. And if we look at where we reached as far as the highest high goes on the Qs so far, so we're at 121.61, and we can see that the highest high at 2 o'clock on Friday, 127.56. That's a whole lot more than 121.60 something. So we're up about $6 in the Qs for that time period. It's nice, folks, when the charts work, when the method works, and we're very happy to see that happen. So we're still watching that. And again, you can take your profit at any point in here, friends. You don't have to get greedy. Any point in here is a good time to take those dollars and run. And again, we're not talking about real money. We're not a stock calling service. I had somebody post on Facebook yesterday. They had been trading for 2 years, and we made it look way too simple. And I was like, well, you probably shouldn't have been trading for 2 years. You might have been training for 2 years before you started trading. And they said they didn't make money, or if they did, it was really, really hard to do so. Folks, we're an education firm. We're not a stock calling service. We have never charged anyone for anything here. And we are not about to give out market advice. You should be training for 2 years before you even think about trading for 2 years. If you want to be successful before you start spending your hard-earned money, hell, you might train for 10 years before you actually start trading. It depends on how long it takes you to pick this up and how much time and energy you're willing to devote to it, and how blessed you are in actually understanding it, being able to control your emotions. But we are an education firm. We are not a stock calling service. We say that over and over and over again. I always get a kick out of the people that write me and ask for advice. I just got into a Qs trade at 123. When should I sell? I'm like, dude, I am not giving you market advice. If you want to study with us, figure out how we do this and get good at it, and then you want to leave or at some point make up your own mind and your own decision about when to actually spend your own money, that's your call. But we don't do that. So please don't write me for market advice. Don't write me and tell me how you're not making money in the market, because we're just about learning to read the charts. That's it. That's all we're about. We want you to learn how to read these charts so that you become excellent, prescient in your ability. And once you do that, then you can make up your own mind what you want to do. You want to get into options. You want to get into covered calls. Whatever you want to do, that's all up to you. And in fact, I have been having a lot of you ask me about how can we practice what we're doing with options. Well, of course we can, and we will work on some training in the future to help you in being able to figure out how to practice that. And those of you who are just tuning in for the first time, when we talk about practicing, you're like, well, how do I practice? Go to any of the online brokers. You can go to Options Express, Options House, TD Ameritrade, Charles Schwab, you name it. Any of the online brokers, sign up for a virtual trading account. Make yourself a millionaire virtually, and then start practicing. You can practice buying the Qs. You can sell covered calls on the Qs when you think it's topped out. You can go naked shorts. You can do whatever you want virtually. It doesn't cost you anything, and we encourage you to practice all those things. Again, don't get hung up about always getting it right. Get hung up about experimenting, trying. listening to what we have to say, reading everything you can, studying everything you can, practicing everything you can, and developing your own methods. Take what we give you that works, that you like, reject what you don't. That we are never saying that we have all the answers to everything. Now let's keep moving through these charts, my friends. We're going to go to the weekly, and we're going to take a look at gold for this is the last chart we have to look at before we talk about the news that might be affecting the market over the next week. What do we have going on in gold on our weekly chart? Well, we also had a crossover. That was a couple of weeks ago for the week ending the 27th of January, to crossover on gold. And as I recall, for January, just in that short one day when we jumped in on the 30th through the 31st, we had gold go up. I believe, gained, it was 2% in gold. It has since gone up considerably more over the last couple of weeks, and gold continues to rise. Like we said, it was up 0.26% on Friday. If we go into, well, we'll also talk about, we had, if you recall, those of you who were doing our traditional method, looking at the 2-hour chart, when did it give us a crossover going up? Well, let's explore that. Again, it was around, 10 a.m. Again, it was around noon on the 30th. And the highest, the worst point you could have gotten in throughout that hour was 114.30. How high has gold gotten since then? Well, on the 8th, it got up to 118.58. Where is it right now? 117.46. So that is where it closed at the end of the day on Friday. And again, that's 117.46. Our jumping in point, worst point you could have jumped in, was 114.30. If you'd gotten in right when that candle opened with the crossover going up, you would have gotten in at 113.49. 113.49 to 117.46 is $3. That's not bad. That's not bad at all for something that cost you, when you jumped in, 113 bucks. So again, when the charts work, we like to see it. When the charts don't work, and sometimes they don't, that's when we have to cut our losses and get out and take our money and run. Now let's look at sort of how gold is doing. When do you want to consider getting out of gold? Well, again, when you like your profits, $3 is pretty darn good in less than a month. But let's look at what's actually less than a month. Hell, it's 2 weeks. So let's look at what we see on our large chart. The weekly chart, we do see that the derivative oscillator is continuing to grow, and we see that the PPO, the price percent oscillator, is continuing to shoot up. That is a good sign of gold continuing to move in that same direction. If we look at the 2-day chart, we're getting a little smaller. We can see that again, gold not going up on the 2-day chart as strong as it had been. It again is not running parallel yet, but the latest candle on the 2-day chart is actually showing some signs of weakness, looking like it could have topped out on that 2-day chart. So again, pay attention. Don't hesitate when you have a great run-up to at least sell part of your position. You could sell half of it, okay? You don't have to ride things all the way up and all the way down because you're too greedy to take profit and get out, and then turn around and kick yourself in the butt saying, oh, I only made $3 a share. I could have made $6. Folks, in this market, remember, what are people getting on bonds? 1%? Our highs last month, 5.15%. We are definitely out of the summer doldrums, and that was on our weekly trade. So just pay attention to those things. We will continue to monitor these charts as we go ahead. Now, let's cover, and again, I'm going to dispense with going over the news and things that moved the market in the last week. You all, probably saw the Wall Street Journal, listened to the press. I want to just sort of give you an update on what might be moving the market, or what can have some impact and effect over the course of the next week. Japan is going to report on Monday its Q4 preliminary gross domestic product. Again, I don't think that's going to move our markets big time. I mean, with any of the foreign news, typically, if it's really, really, really outstanding good news, it might impact our market. If it's really, really, really bad news, it might impact our markets. And don't forget, a lot of times that news has already filtered in before it's released in our markets. When you see strange things happen and gold bound up or bound down, and you wonder why that's occurring, and then 3 or 4 days later, you find out that something happened in the world that had an effect on gold, and you're like, wow, the market already showed that. Yeah, it did, because information tends to leak into the market much sooner than it's ever reported. That's why they say on Wall Street, you buy on the rumor, you sell on the news. They know what's going on. The market gets the information and reflects it. That, my friends, is why we watch the stock charts. We don't listen to the news. Okay, next, Eurozone reports. That's going to come out. They're going to end up reporting their preliminary fourth quarter gross domestic product. That's going to happen on Tuesday, along with the United Kingdom on Tuesday, Valentine's Day the 14th. They're going to release their consumer price data. United States is going to release on Wednesday also. We're going to release our retail sales, our consumer price data, and industrial production. All that stuff is going to come out on Wednesday, the 15th. So again, if retail sales, industrial production, consumer price data just blow it out or are crushed, then yes, that could have some impact on the market. And you might see that filtering in on Monday or Tuesday if it's going to be bad news. So just be aware, probably what's most likely to roil our markets may happen midweek. And then on Friday, at the end of the week, the UK is going to release its January employment data. So that's the UK releasing that on Friday. So not probably a big impact on us at all. Wednesday is the day that you could have some news impacting us. Don't forget that following Monday, not this Monday, but the following Monday, what would that be, the 20th? The markets are going to be closed on the 20th of February for President's Day. So don't forget that. That is not this Monday the 13th, but following Monday the 20th. Folks, that is where we are. We brought back our old charts. We've put the new ones on ice for now because you all found those confusing, and I can understand that. We try to put everything, both the PPO, the price percent oscillator, and the derivative oscillator on the same chart with price movement, and you guys didn't like it, and we listened because we're all about helping you. You have questions, problems, concerns, we're glad to hear from you. You can always write us CW at chartingwealth.com. That's CW like Charting Wealth, CW at chartingwealth.com. If you don't already have our Charting Wealth layout at freestockcharts.com, if you don't already have our How to Read a Stock Chart video, if you don't already have our daily market worksheet, which we just updated, so it has TLT on it. It has the 2-hour charts. It's just what you guys need. If you don't have those or you need to update yours, we've also just saved the latest chart that we have. Again, this is the chart with the half chart with the price movement on the top and on the bottom, the one you're used to, the PPO and the derivative oscillator. If you don't have those, we also just uploaded a new version of the charts. So please, check. Those of you who subscribe already, you'll have the latest versions available. You'll have the links to those. All you got to do is go there at your email that you get. All that information will be loaded on there. If you don't have that information, you want any of it, please don't write me separately for that. Please go to the website, chartingwealth.com, and subscribe. You will get our video update that we put out every single day the market's open, along with this comprehensive weekly review and forecast once a week. Thank you so much for being with us, folks. We appreciate you. We hope you appreciate us. If you do, go and subscribe to our YouTube channel. Help us out also at iTunes by going and subscribing to our channel there, Charting Wealth. You guys have made us as high as number 6 in the world as far as stock market podcasts go. We appreciate that. Please continue to help us out. Give us a 5-star rating. Say something nice about us when you subscribe. God bless. Thank you guys so much. Let us hear from you. Let us know what you need. Check out all the training, all the good stuff at our Charting Wealth website. Hope you have a great week practicing these charts. God bless from chartingwealth.com.